Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is March 23rd, 2020. It's 8 o'clock in the morning. We're going to go over our events here for the news and then move into the technical analysis for the market. This morning, we have another Fed announcement. They are essentially going to buy everything, including corporate bonds. I believe they got the authority for the first time in history to purchase assets that are outside of the government, um, or they've never purchased, to my knowledge, corporate bonds before. But essentially, the Fed is stepping in, and I'll go over it later. I don't have the article up right now, but the Fed is literally just going to start buying everything. So the Federal Reserve's policy is moving into basically what Japan has been doing. So the Fed unveils open-ended quantitative easing, including corporate bonds. You can read about that. There's probably a whole bunch of different articles, but my webinar last night, if you guys didn't see it, I recommend you watch it. I went over basically what they're going to do, and that includes things like this. The asset balance sheet of the Federal Reserve is just going to expand from here on out, without a doubt. And they're proving us right every single day. Tuesday has more news announcements than today. Today is pretty light. We have G20 meetings all day. Consumer confidence out of the euro at 10 a.m. And then tonight, flash PMI out of the Australian dollar and flash PMI out of the yen. Overnight, French PMI, German PMI, and then Euro PMI. And let's see, Great Britain Pound PMI, and then USD. That's like all the PMI numbers are coming out. Now, something to note, PMI was out of the production manufacturing index number out of China was at the end of the month, last month, and it was a really destructive number for the market. So it's going to be interesting to see. This basically shows the manufacturing capacity for all of these different in markets. And what you're going to see here is, let me get rid of this. I accidentally opened it up too big. Anyway, you can see the previous was 52.5, forecast 39. These are some major dents in the production manufacturing capacity of all of these countries that is going to be hitting the market tomorrow. So I think it's going to be a pretty news worthy event. PMI is probably one of the best measures that we have to realize the damage that's getting done in the back of the economy. So something to just keep in mind. We're going to start off here by analyzing the S&P 500. I'm going to go to a daily time frame, and we can. Why is that not working? Move to our analysis. So coming out of the initial sell-off, which began a month ago, about a month ago, we had our full 50% retracement. This 50% retracement completed our targets, and we technically front ran the halfway back every single time. We haven't actually traded up into the 50 from that point. We have not traded into the 50. We've gone fully through targets. You can make the argument that we are totally in extensions now, even though I believe if we trade this traditional, it'll see some selling pressure. So that traditional above, and I'm just going to mark it up with a dashed line here, would be a 26.55 half right now. 26.55 half, and that's obviously far, far above. What we have and what we left off last week, I should say, inside of was a full 50% retracement short from the high of Friday to low. From the high of Friday to low. That equals 24.79. 24.79. Okay? We will remain bearish below at this point in time 25.31s. 25.31s. We came pretty close to completing those profit targets That was a limit down scenario, and then we have been bid out of that limit down. Interesting enough, we were bid out of that limit down. Being bid out of that limit down came on the backs of this morning's news, which, to somebody knew last night, as they bid it out of the limit down scenario. There was a halfway back long that traded right before the Fed announcement. Always a coincidence and a setup, right? And you can make the argument that going into this morning, there is a counter trend long. I am just going to observe it. I'm not interested in trading it, but we have a counter trend extension long from 32.1275 at its 50%. That upside target would be 24.20 half. And upon the completion of that profit target, I would be willing to look for a same anchor new high until we get back up into the top of our range. But right now, I'm just looking to observe this extension, and it's an intraday trade. All right. Moving on to the Dow, similar setup. We had Friday's high, too low. Friday's high, too low of last week. So that was the 13th, low to low. That, once again, we were locked limit down last night, and we did not complete our profit targets. We came off. We had that similar setup, which is that low to high into an extension. So right now, and I know it's such a big range, we have an intraday long setup with basically what would just be a retest of resistance. A retest of resistance. At this point in time, I think it's pretty clear, even with Fed stimulus, this market is not going to make a V bottom. It's not going to make a violent reversal. There is going to be violent moves up and down, but by no means do I think you are going to be late to the game ever buying this market. I think my analysis here on this market is that we eventually come halfway back from basically zero. The Dow did come halfway back from the 2009 low to high. That was, we'll see. We will see. I mean, the Fed is doing unlimited asset purchases, and how can a market go down under unlimited asset purchases? I'm not sure. But if we get a trend break, we will pay attention to that. We will pay attention to that, but we do not have a trend break right now, and we be far from one. And once again, this whole event is far from over. So we are still in a downtrend. Even though we have this pop on unlimited asset purchases, we are still in a downtrend. The Nasdaq traded the high from Tuesday to the Tuesday that was it March 3rd to the low of the 12th into the 50% retracement. Our next 50% retracement comes after the completion, only after the completion. But I do believe, you are seeing participation. You are seeing still that Friday high to low. It traded last week. We consolidated. We've made a new low. There is participation on that level in the Nasdaq. Their sellers stepped in there this morning. So that, as long as we stay below that 61.8, that's going to give us another downside target, 64.35 here. This is another rally into a resistance. It's amazing. Moving on to oil. Oil has traded back to the bottom of our range. We have the full 50% retracement from the high after the gap down, which occurred on the 10th of March, to low. There is a valid halfway back short from Friday's high to low today, and that is at 24.68. 24.68. The USD JPY is the first currency pair we're going to go over. We have an extension from 107.88 to high, 107.88 to high. That upside target is a 112.35. A 112.35, and we have traded it basically 3 tests. All right, we had the extension first appeared here, same anchor new high, traded once. twice. Here's a third time, and we're continuing to see some strength. It's amazing that the Fed comes out. This news should technically weaken the USD JPY, but it's not. It's not. The AUD USD, it's still in a downtrend. We do have a halfway back that has held here twice, but it is absolutely still in a downtrend. And our 50% retracement, and this is all of these currencies, they're on the back of this move out of the Fed. They've rallied up. Initially, you would think that would weaken the dollar, but there's a $12 trillion short squeeze in the dollar right now, because all of the debt of the world is paid in dollars. So all of the currencies of the world are falling against the dollar, even though they're printing it into oblivion. When that short squeeze ends, you'll see a reversal of this trend. But we have run up into the next halfway back in the Australian dollar. That is from the high of the 20th to low. Downside target is 56.30. 56.30 on this halfway back, and there is a daily extension that is drawn from the low of the 8th, 63.10 to low, and that's 53.20 is that downside profit target. These moves in the currencies are massive. Okay, they're massive. Moving on to the euro. The euro has an extension short, and that it's been inside of since last Thursday. It is the 110.51 to low. 110.51 to low. The extension begins from the low of March 12th to low. We have traded it once on Friday, and then our same anchor new low traded its 38% retracement right here. Once again, on the back of the Fed news, did nothing about that news broke trend in any of these currencies. Downside target 10557. The euro looks like it's on pace to go to parity to the dollar. It's going to be interesting. Here's where the markets start telling the truth here. I want to point out something that is really important. And once again, if you did not get a chance to watch my webinar last night, please do so. Feel free to share it with somebody you think might find it useful as well. I think it's really important. Coming out of the lows of early 2000 into the 2008 crash, you initially had a full 50% retracement get front run at a 38.2. It was front run at a 38.2. Okay, you can see the bids came in at 38.2. There was a little bit of a dip in. When the asset prices of everything fell in 2008 with the crash, gold fell too. But then, as the Fed basically started the monetary policy that it's been in ever since, gold began to rise, and it tripled in price. Well, we do have this full 50% retracement from that same low to high that traded in 2015, and that's when the market started anticipating that the Fed would need to go back and purchase assets. Well, the market was right, and they were right, and they accumulated for years. We broke out. This move was calling the Fed's policy activities before they even happened, because they understand how the market works, the institutions that move price like this. We have run back into that 38% retracement from the lows of what is 2015 to high. We traded it basically to the tick. It was a 38.2. It was a very aggressive front run. That was last week. We traded it. There was a wave up. There was another wave up. We consolidated. We closed Friday on a halfway back long. Friday's halfway back long targets 1533s. After 1533s complete, we'll have our next traditional measured move. But inside of that and out of the back of the Fed news, we, just like the indexes, we had traditionals before the news came out. and now we have extensions, and we'll see what happens with them. But the upside target lines up with the higher time frame. It's a 1533 target, a 1533 target. Silver, little different on the weekly chart. Silver moves further, farther, faster when it comes to the weekly chart. Now, silver got absolutely crushed this year, and it's kind of amazing. When there is an all-asset liquidation, they sell everything. And silver, for whatever reason, and this makes me think bigger things are at play here. We're at I think it's like a 12-year low, maybe, or a 10-year low at least in silver. However, it's totally sold out online, and that's just proof that this market, as far as tracking the price of in the demand of the commodity, is not a real market. And that's the danger to when people wake up to this reality of what actually happens to the price of silver, because this is not a real market as far as tracking the price of the underlying commodity. The underlying commodity, online silver eagles are going for a $10 premium, which is like 80% increase from the price it trades at online. There's no other commodity that does that. 80% difference. We had a full 50% retracement long here in silver last night, and it traded Friday as well. We went sideways, and we have broken out here. We have broken above the full 50% retracement. The next traditional from the low of the week to high is absolutely valid, and that is the least aggressive buying setup. There is also on the 5-minute chart an extension, or actually I think it's just a next traditional from that swing low to high that is traded. Okay, so those are the setups here. 1266 would be the support level below. The other support level is 1276.4. Moving on to a couple more currencies. The Great Britain pound barely moved. Barely moved when the QE came out, or the next level QE. The extension that I have up here, I'm going to go to a daily chart, show you guys what this looks like. It is the daily low. Look at this move in the pound lower. Incredible. 127.25 to low. We have traded our 38% retracement. That is our resistance level. The 38 and 50% retracements are our resistance levels above. And I'm just going to mark these up with a couple of boxes. We have broken the opposing 50% retracement long. Halfway back short is valid. In fact, we were front run aggressively in that level last night. Halfway back short is valid there. And then for the USD CAD, we had this traditional from the lows of the week last week to high. We traded it. We have our next halfway back that traded on that Fed policy decision. All right. That's going to wrap up. Oh, wait, let me go over the VIX. The VIX is just back in this extension. If at some point in time the VIX continues to fall, guys, what we're going to run into, and I'm just going to look at the halfway back from the beginning of this move. There's going to be like a couple of different variations. There's a possibility that we just run into the full 50% retracement for the year, which would be 46.57. But right now, the VIX is in a range between the short and the extension long. The short and the extension long. Okay. If the ES is going to continue to go straight up, the VIX needs to hold below this extension. If the VIX can go straight down in this is a counter trend sequence. If the VIX can go lower in a counter trend sequence and stay below 60.20, the ES can bid back up into a retest of those higher time frame resistance levels. Something to be aware of. All right. But with that being said, that is going to wrap up my morning trade plan. I will share my levels with those of you guys here in the room. Everybody trade safe. Have a wonderful day. And I'm going to be jumping on the squawk in the room just for the morning. And you should be able to jump on the squawk too. I just don't think you'll be able to speak. And I'll just be, answering questions over the microphone and calling out the different anchors and things that we are seeing. All right, everybody take care. Have a great day, and I'll talk to you guys there.